Every nation on the planet is indebted. The United States now owes more than $38 trillion, the largest total in its history. The European Union carries roughly $14 trillion, Japan nearly $9 trillion. Even petroleum-rich states like Saudi Arabia or export powerhouses such as Germany and China all owe vast sums. But here's the paradox. If everyone owes money, who exactly is being owed? This is the financial historian, where finance, power, and history intersect, and nothing is ever as straightforward as it appears. Debt isn't just a burden, it's the framework of the modern world. Every war, every crisis, every boom and bust rests on this invisible scaffold of IOUs. And if you trace the chain of creditors long enough, you find something unsettling. The world doesn't owe money to any single party, it owes it to itself. But that doesn't mean everyone benefits equally. To understand how we arrived here, a planet awash in over $315 trillion of total obligations, nearly 3 times the size of the global economy, we need to go back to the beginning. Centuries before the first credit card swipe or digital transfer, the idea of sovereign debt was born not on Wall Street, but in war. In 1694, England was fighting France and running short of gold. The monarch turned to merchants for help. In exchange for a perpetual stream of interest payments backed by future taxes, they bankrolled the crown. To administer this new arrangement, the Bank of England was founded. It was revolutionary. The state could spend funds it didn't yet possess. In return, lenders gained something invaluable, a government promise that could be bought, sold, or traded. That was the birth of the government sovereign bond, the seed of the modern financial system. France copied it. The Netherlands refined it. The newly independent United States adopted it to finance its revolution and later its westward expansion. Public debt became not a mark of failure, but a measure of credibility. The capacity to borrow became the capacity to rule. Empires once seized territory to extract gold. Now they issued bonds to extract interest. The battlefield shifted to the balance sheet. Fast forward 3 centuries, and debt has become the world's dominant export. The United States owes $38 trillion. Japan over $9 trillion, and global borrowing grows by roughly $1 trillion every 100 days. Every country owes, every bank lends, every citizen through taxes, savings, and pensions is both debtor and creditor. But who exactly holds the other end of the rope? Let's start with the United States because its debt isn't just national, it's global. Out of that $38 trillion total, about half is publicly held, meaning owed to investors rather than to other parts of government. Roughly 2/3 of those investors are American banks, pension funds, mutual funds, insurance companies, and the Federal Reserve itself. The remaining 1/3, about $9 trillion, sits in foreign hands. Japan is the largest holder with around $1 trillion, followed by China with about $800 billion, then the UK, Luxembourg, and Belgium. So when people say the US is in debt to China, that's technically true, but only for roughly 2% of the total. Most of what America owes is owed to Americans. The Treasury issues bonds. Banks and funds buy them. The Federal Reserve often purchases them back, creating new dollars in the process. Americans pay taxes that fund interest on those bonds, which then flow into U.S. retirement accounts. It's a feedback loop. The debt is real, but the creditor is largely a reflection of the same system. And this circularity isn't just American, it's global. Japan lends to the U.S. through Treasuries. The U.S. lends to Europe through the IMF. Europe lends to developing nations via the World Bank. Emerging economies, in turn, lend back to advanced ones by parking foreign exchange reserves in Western bonds. It's a planet-wide game of hot potato, except the potato is made of promises. Every country holds someone else's IOU. Every promise is secured by another promise. It's like a poker table where every player has borrowed chips from the next, and the only rule keeping the game alive is that nobody stands up. But there's a 4th layer, the most powerful of all, the markets themselves. Behind every government bond sits a network of institutions, hedge funds, pension funds, sovereign wealth funds, and central banks managing tens of trillions in assets. They are the ultimate arbiters of credit. They determine which nations borrow cheaply and which must pay a premium to survive. When they lose confidence, currencies slide, governments fall, and entire economies can be restructured overnight. Democracy decides who governs, markets decide who survives, and the ultimate market maker, the modern high priest of this system, is the central bank. Central banks don't merely manage debt, they manufacture it. Every time the Federal Reserve or the European Central Bank buys government bonds, it creates new money in exchange. The liability of one balance sheet becomes the asset of another. Every dollar in circulation represents a unit of debt somewhere else. There is no such thing as debt-free money. Every coin, every bill, every digital dollar has an invisible IOU engraved on its surface. For decades, this loop has persisted through confidence. As long as investors believe governments will pay interest, even if never the principal, the machine keeps turning. But what happens when confidence wavers? We've seen it before. Greece, 2010. The government's debt became unpayable. Bondholders panicked. Yields spiked. The ECB and IMF intervened, with austerity attached, tax hikes, spending cuts, mass unemployment. For a generation, bailout became another word for sacrifice. Argentina. Repeated defaults turned debt into a national curse. Sri Lanka. Fuel shortages and political turmoil when foreign currency ran out to service loans. When the system breaks, the creditors suddenly become visible. The IMF, the ratings agencies, the anonymous bondholders who can hold entire nations by the throat. And yet, even after collapse, the same logic restarts. New loans replace old ones. Old debts are reworked. The machine resets with a new label on the same balance sheet. That's because in the 21st century, debt isn't designed to be repaid. It's designed to be rolled over. Governments today don't actually plan to pay off their debt. Not now, not ever. That's not conspiracy. It's policy. When you or I take a loan, we're expected to repay the principal. Governments operate differently. They treat debt like a rolling subscription, issuing new bonds to retire old ones, a process economists call refinancing. Interest becomes the real product, the rent charged for stability. The global economy now depends on that rent. Like a shark that must keep swimming to breathe, the system runs on confidence, not repayment. The United States will never retire entirely its $38 trillion debt. It will refinance it indefinitely. Japan has been rolling its debt for decades, now above 250% of GDP, and yet its government bond yields remain near zero. Investors aren't waiting to be repaid, they're waiting to renew the deal. Why? Because for them, government debt is the safest collateral in existence. A U.S. Treasury isn't viewed as a liability, it's an asset, the foundation of global markets. Pension funds hold it. Banks use it as security. Central banks treat it almost like money. The system depends on governments never paying off all their debt, because if they did, the world would lose its most trusted financial instrument. Imagine Washington somehow paid down every last dollar of its debt. Banks and funds worldwide would suddenly lose their most stable asset. The dollar supply would shrink dramatically, triggering deflation and contraction. Paying it off would undermine the very thing that keeps the economy functioning. So, governments do the opposite. They keep issuing not recklessly, but rhythmically. Debt becomes a kind of heartbeat for capitalism itself, pulsing through every pension, mortgage, and market on Earth. That's why when politicians talk about balancing the budget or paying down the national debt, they're selling an illusion. The goal isn't to eliminate debt, it's to keep it sustainable, serviceable, and desirable enough that the system never stops believing in it. Because once trust fades, the numbers stop mattering. Confidence collapses, rates spike, and an economy built on rolling promises grinds to a halt. That's the real secret of sovereign debt. The plan was never to pay it back. The plan is to keep the world believing it will. It's a closed loop of trust. And as long as that trust holds, the numbers can stretch indefinitely. But trust is not evenly distributed. When we say we owe it to ourselves, that's only half true. Interest payments don't flow equally through society. They flow upward from taxpayers and workers to the institutions and investors that hold the debt. In other words, debt isn't just a transfer between countries. It's a transfer between classes. That's why global inequality and global indebtedness often rise together. The system rewards those who own debt and penalizes those who merely service it. If that sounds familiar, it's because it's the same story scaled up, from households to nations, from nations to the planet. Creditors aren't villains, debtors aren't victims. They're two sides of the same engine. The problem is what happens when the engine runs out of fuel, when new borrowing can't keep pace with the promises already made. That's when the question, who's the creditor, stops being abstract and starts being personal. Because at the top of this global pyramid, there isn't one face to blame. It isn't China. It isn't Wall Street. It isn't the IMF. It's all of them and us. The modern financial system has turned debt into money. Governments issue it, banks multiply it, investors trade it, and citizens depend on it. The line between debtor and creditor has blurred beyond recognition. Debt once meant bondage. Today it means balance. But if that balance ever tips, if confidence breaks, the illusion ends, and we remember what debt really is, a promise that can't be kept forever. If this gave you a new perspective, subscribe. History has the answers. I'll show you where to look.